Would you look at that? We got an alarm. AUD CAD breaking the neckline to then sell. That is my number one pair for the week. And that's funny that just happened live. I mean, I figured why, right? It's 5 o'clock. So there's some spread. What is going on here with this Wi-Fi? Okay, let's see. Oh, like USD JPY breaking higher low. Right, I don't even know what's going on. All right, let's see. Okay, yeah. So this one is happening, but obviously we can't take it right now. I'm actually glad that kind of happened right now. All right, perfect. So let's get into this week. So what I'm going to do is I'm going to break down pretty much the top 1, 2, 3, 4, 5 pairs for this week. If you guys noticed, last week I had a total of 3 pairs. This week now we have 5. Why? Because I just do the same thing every single Sunday and I look for the best ones. And throughout the week, pair that wasn't ready this week will be ready next week. So during last week, pairs that we weren't trading last week are ready this week. Yeah, you get me? So this week we have a new lineup. USD JPY still remains. Euro GBP has kind of left. If you guys remember Euro GBP, right? This is the pair that we did together. Like you guys could just go back, watch the recordings, and then came back to our area of interest 1, and then had to sell. We literally predicted this trade perfectly from the pullback. You guys remember right here, where I tricked some of you guys thinking that it was bearish, but then it was actually bullish. And then what a coincidence, we came to our daily area of interest 1. And then look at the huge push we've had so far. So we predicted this whole entire move, all of it by just reading simple market structure. So I'm actually glad this happened because if you guys notice, for this week, Euro GBP is not on my top 5. And this has happened to me in the past. And then some people would be like, well, why isn't it in your top 5 if it did what you wanted it to do? And I'm like, respectfully, like any pair that lines up with the strategy has a high probability of doing what I wanted to do versus not. But since this pair already left, like the trade is gone, there's no reason for me to see it anymore. Like if I'm not catching the trade here, right at this area, then I'm not interested in the trade. Like there's no reason why, like there's no entry for me in the middle right now. That would be scaling in. And that's what I talked about in the last class. Like there's no scaling in where I can build a series of confluences with other confluences where they at. Well, you know, they get lost somewhere here. But yeah, basically the point is, since it's already gone, it already left. That's it. There's nothing I can do. I'm not interested in it. So that's why it's not in my top 5 to trade for the week. So even if you're right on the trade, it goes in the direction and you didn't enter it, it's okay to let it go and get another one. That's what we're doing this week, right? So we're gonna start off with the top 1 pair. I mean, like the first pair on for this week. What did I have written down there? Okay, perfect. So starting off this week is AUD CAD bullish or bearish. Type 1 for bullish, 2 for bearish. 1 for bullish, 2 for bearish. All right, I say 99% of you guys got it. 99% of you guys got it, right? So weekly, bearish. You guys are seeing how fast and easy it is to see it now, right? You just see it, boom, right off the bat. Daily, are we bullish or bearish? Take your time. 1 for bullish, 2 for bearish. Take your time, take your time, take your time. 1 for bullish, 2 for bearish. All right, let's do this. So I make it easier for you guys, right? Which is what I should do because I don't have the lines on there. I'm just going to do this, right? Just going to try to make this as accurate as I can. If you were to see it like this, is this bullish or bearish? Type 1 for bullish, type 2 for bearish. 1 for bullish, 2 for bearish. So surprisingly, this is like 70-30, right? So let's do it together. You guys already know what that is, and you guys already know what this is right here. So the moment we break above, or the moment we break under, we change. And if you noticed, we haven't changed. You guys see how crazy that is, right? We just use this point up here, this lower high. We use this lower low. We haven't broken under this lower low, and we haven't broken this lower high. Like, that's really it. It's really that simple. So yeah, so currently right now, the daily time frame is bearish. Okay. Let's just delete this. All right, perfect. Well, deleted the wrong thing. All right, so daily time frame is bearish. And then the 4-hour, is it bullish or is it bearish? Take your times, take your times, take your times. My goal is for you to see it like this, answer, and then I'll draw out the lines and then you answer as well, right? Because it's pretty tricky to like tell without the lines. You kind of just have to like visually draw them. So 1 for bullish, 2 for bearish. Or I'm just trying my best to just draw every market structure point. Right? So we'll do it. Check it here now. That's that market right there. 1 for bullish, 2 for bearish. Exactly. So we are currently bearish. This would be the lower high, and then this would be the lower low. You can tell this is the higher high at 1 point, but we body closed above, making this the higher high, making this the higher low. We then shifted. This is the lower and this is the lower high. If it's like this, then it's like this. We closed under, then this turns into the new lower low. You do the snake, and this goes into the lower high. If that makes sense, type 1. If it doesn't, type 2. Beautiful, 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 beautiful. So if you guys notice, what do we got? 3 time frames in sync to take the trade, which is fire. We're already off to a good start, right? So this is where we will go to confluence 2, which would be, where are we buying? Where are we selling? So if you guys know, we could only buy or sell on the weekly or the daily time frame. And then this is where we have to start from the highest time frame down. So we start off from the weekly time frame down. This is where we go to the weekly. The weekly lower high, we would call this point right here. And then the weekly lower low could be called, I mean, it's very tricky, right? This should be very tricky because if you were to put this as the lower low, then technically we broke under right here with this body. So then this would be the lower low, and then this would be the high, the lower high. Very, very, very tricky. But according to the rules, it would be like this, because if this is the lower low, if that body is the lower low, let's just put it like this, right? This is when I put myself in this type of position, this is what I ask myself. If this trade as of right now, when it was like this, if this trade were like this and it would have just kept going down from here, would I have counted that as a lower high? And yes, right? Because we did a clean lower high, rejected a zone. So I would have counted this as a lower high, and this would have been the lower low. If you guys agree, type 1. If you guys don't, type 2. Perfect, right? Yeah. So we would have counted this as the lower high if this kept going to the downside, right? Because we obviously body closed under the line. So we didn't close, we didn't do that whole big move, but we did manage to stay right there. So as of right now, technically, that is the lower high. So as of right now, to find an area of interest, we are only, for the weekly time frame, we're only looking through this zone right here. Obviously, this is a very small zone for the weekly time frame. If you notice, there's pretty much like nothing. We, I guess like good, thankfully or whatever, we wicked in to this other zone right here, which is the actual strong zone. We wicked into this neckline of the head and shoulders, weekly EMA, resistance, support. So the fact that we wicked into there with this weekly candlestick, fire, right? But we could still add some things on the weekly time frame. We're just not selling at a weekly area of interest, right? So let's take this right here. So what do we got from all of this right here on the weekly time frame, right? Let me just do this. Let's actually do it like this. It's gonna be easier like this. Right. So as of right now, this is all we got, right? We got to do this. Are we bullish or bearish? So we already understand we are bearish. Need 2 time frames in sync. We already got 3. Now we start off from the weekly and we go down from there, right? So right now on the weekly time frame, do we have confluence 1? Type 1 if yes, type 2 if no. 1 if yes, 2 if no. So it'll be a little tricky, right? Because I probably confused you guys with this zone right here. So as of right now, we are rejecting a weekly zone, right? Which would be this up here, but we're not at a weekly area of interest. Area of interest would only be whatever is inside of here. That's why I was kind of like boxing it off, right? So as of right now, we are not selling at a weekly area of interest. Are we touching the weekly EMA? Type 1 if yes, type 2 if no. Beautiful. So yes, we got a rejection from the weekly EMA. Very clear. Weekly EMA rejection. Do we have a weekly candlestick rejection? Would you guys consider this a weekly candlestick rejection? 1 if yes, 2 if no. Exactly. So this is a weekly candlestick rejection. We got this. Rejection from previous structure point. Is this a rejection from a previous structure point? Type 1 if yes, type 2 if no. So if you guys notice, wicked into previous structure point. And then do we have a round psychological level? And I'm going to save you guys the potential mistake. We can't have a round psychological level because we don't have an area of interest on the weekly, if that makes sense. Type 1 if yes, type 2 if no. Obviously, there is a round psychological level in here, like 90, 100, but you know. So we got weekly touching EMA, weekly candlestick rejection, weekly rejection from previous structure point. We got these 3 right here. So let's just add the percent, 5%, 10%, and then 10%, right? And then we got 30%. So just with these things alone, let me just delete this. Oh man. Just do this. So just with these things alone, we already got a 30, 35, 45, 55% chance of this trade going that way. And we still got daily and then 4-hour time frame. So if you guys are with me so far, type 1. If you guys aren't, type 2. You guys are seeing how you guys know exactly what you're looking at. And at what, 4 or 5 days ago, you guys had no idea what you guys were looking at. You guys seen how crazy that is, right? It's just time. Imagine this is what, 5 days? Imagine like 5 years. Imagine there's just so much clarity over time. I just want you guys to really understand that. So daily time frame, right? As of right now, we are bearish. So now we do the same thing. We gotta understand these top 5 right here. So we already know this is the lower high up here. And we already know that this is the lower low right here on this body. So then this would be the lower low. So obviously within this move, like we're not in the first pullback of the move. If you notice that this would be the first pullback of the move. The first pullback would just be this one, and we're expecting for this, right? Because right now, like that already happened. So we already got the pullback within the move. So it wouldn't make any sense to do this right here. Does that make sense? So now I'm just because like, if anything, we already hit the area of interest, which is this point right here. Like we already hit it. So we're trying to like get a move in the middle of it, but just make it make sense. It's exactly what I said I wouldn't do on Euro GBP, but this one makes more sense because we have all 3 time frames in sync, and there's a big potential bearish play with inside of it. So repeat that. Okay, yeah. So we can't look for, I mean, we could look for a lower high. Like we could, okay, let's put a lower high, and then this would be the area of interest, because we already had the pullback to the area of interest and we already rejected around psychological level. This was the area of interest on the daily time frame that I had put. Rejection from the EMA, like we already did all that, but we didn't enter at that. So now we're entering in the middle of the move to kind of catch it to like the end. Basically what I said that I didn't want to do in Euro GBP. Where is it? Yeah. So basically like what I said I didn't want to do it in Euro GBP, because Euro GBP, it just doesn't look as clean, which is obviously stuff that I just do because like I'm experienced and like over time you'll learn how to do it. But the ideal trade right now would only be to take it at this point right here. If you don't take it here, don't try and take it in the middle. I hope I didn't confuse you guys with any of that, but do you guys understand? Like the ideal trade is to take it here. I'm taking it in the middle just because I didn't get in on the top. If that makes sense, type 1. If it doesn't, type 2. But we can still build like confluences off that, right? So right now we can't put an area of interest because we already rejected from it. Like we can't put an area of interest because we're not selling from an area of interest. Like it already had the rejection from the area of interest. Are we touching the daily EMA? No, because this is not the daily EMA. The daily EMA is not there. Do we have a daily candlestick rejection? As of right now, this would be a daily candlestick rejection from this structure point. So we have daily candlestick rejection. And then do we have a rejection from previous structure point? Technically, like within the move, yes, but I personally wouldn't count this as rejection from previous structure points. And this is not an area of interest, so it is not a round psychological level. If all of that made sense, type 1. If it doesn't, type 2. Perfect, perfect. That's perfect. And again, this is like, you guys will learn how to do this over time, right? So after we did everything on the weekly and the daily, now after analyzing all of them, checking them off, the ones from the list, then we move on to the 4-hour. So on the 4-hour, what do we got on the 4-hour? Just find this right here. On the 4-hour, I could only put a confluence for the 4-hour. So what confluences can we add here from the 4-hour, right? Are we touching the EMA? Type 1 if yes, type 2 if no. So I would count this as touching the EMA. We kind of like wicked right into it. So we got touching the EMA, candlestick rejection. You guys are reading the book, you guys would see that this is a what is this called? Like this is called an evening star formation, kind of. Or there's another terminology for these candlesticks right here. It's like a perfect reversal. This is an evening star formation right here. So this would be an evening star formation, candlestick rejection. And do we have a rejection from previous structure points? Type 1 if yes, type 2 if no. Correct. So as of right now, we got all 3. So we got for confluence 6, rejection from 4-hour EMA, 7, candlestick rejection, 8, rejection from previous structure point. All right. So now we are confluence 9, and then the secret sauce. All right, let me just do this, take all this off. All right, so if we were to add this up, daily candlestick rejection is a 10%, rejection from EMA is a 5%, 10%, and then a 10%. As of right now, we're at 30, 35, 45, 55, 65, 70, 80, 90. So if we get the shift to structure, we get the engulfing, would be at 110%, meaning this trade should just be fucking all the way, right? Giving us a load of confluence to take it. So now that we are at this zone, we would just have to wait for a shift of structure. That's exactly what I'm waiting for right here. If you noticed, this is the pullback to the little zone that I drew out here. This pullback is now bullish, higher low, higher high. If you want to count the structure, you do. I personally don't want to, just because I like how it looks on the 1 hour. I'm going based off of the 1 hour here. So if you notice, I am waiting for this neckline to then break. Once this breaks, it's the break and retest of the head and shoulders at this little zone that I have, and then retest the neckline, and then we sell. Does that make sense? Type 1 if yes, type 2 if no. So basically, this pullback right here is having the little bullish structure. The head and shoulders is right in there on the lower time frame. I'm just waiting for the shift of it, and then we're taking the trade to the downside. So yeah, pretty simple. I'm just waiting for the break of this neckline to then go short. So the alarm rung because it wicked in. So I had an alarm here like this, letting me know that we broke under. So I'm going to put it again. Obviously, it hasn't body closed under, it just wicked. So I can't just jump into the trade. It gets crazier every day. It's insane. I mean, yeah, it's gonna only get simpler and simpler. Like I told you guys, like you're having clarity with just like 4 days. Imagine, 4 months, 4 weeks, 4 months, so on and so forth. So moving on to USD JPY. This is the loss that we took last week. It is what it is. You guys saw the strategy play out perfectly where we broke above this right here, where we had the shift. You guys saw this play out perfectly on USD JPY, right? And you guys are going to see it again. So now I'm waiting for a pullback to this area right here, which would be retesting the neckline, the neckline of the double bottom. Once you retest the neckline, you'll understand that this right here on the 30-minute, 15-minute, 1 hour has to create a bearish pullback. If you notice, it's kind of already doing it. Once you get this bearish pullback into that zone, just wait for it to go bullish, and then you take a trade. That's it. You're just seeing how simple, right? It's crazy how I had zero attention to detail before watching you. Yeah, now, I mean, you're gonna get treated how you treat the market. If you pay little attention, you're gonna, get little profits. So if you pay a lot of attention, you're gonna get a lot of profits. It's really what it comes down to. You just gotta whatever work you put in, you're expected to get back. Perfect. But the percentage, I don't understand the question. So that's USD JPY, right? USD JPY, I'm just waiting for the pullback to this area of interest right here to then buy. So obviously this is not a daily area of interest. It's going to be the same play kind of like this one. Since we couldn't get the trade at the top, we're kind of getting it in the middle. But I'm not like scaling it. I'm just getting it in the middle because couldn't get in at the top. Well, we tried to. We just got wicked out. So do you clear your charts after you finish your trade or continue? Yeah, I usually just delete as many things. Like you'll see me delete zones all the time because what good does this zone do me down here if we are about 400 pips away? Like there's no reason for this to be here. It's just subconsciously, it's just messing with your mind. For example, I don't need this here. I don't need this here, like at all. This is all I'm focused on. It's current price. You notice, doesn't it look like price has less weight on it now that we don't have those two simple lines? So weekly time frame, are we bullish or are we bearish? Bullish, type 1 for bullish, type 2 for bearish. I think a lot of people like myself were looking for candlestick patterns on the wrong place. Once you were to show us how to do it, it becomes so simple. Yeah, that's literally it. Correct. We are bullish. So this would have been the play right here. And then we just created the higher low. So this is obviously now bullish. Weekly time frame is bullish. Weekly time frame is bullish. Daily time frame is bullish or bearish. Type 1 for bullish, 2 for bearish. 1 for bullish, 2 for bearish. This one should be very easy. Exactly. We are currently, let's see. We are currently bullish. If you notice, this did not close under that right there. There's no body candlestick closure. So this time frame is currently bullish. We wait the switch of structure at the area of interest right? So we got the daily time frame bullish. And then the 4-hour time frame, are we bullish or are we bearish? Type 1 for bullish, type 2 for bearish. This one could be a little tricky. Let's see. I'm just gonna kind of draw it out. Let's just point this one. No, no. Here. I literally don't even see it. Let's just find out, right? Did I make a mistake? Bullish or bearish? Type 1 for bullish, type 2 for bearish. All right, so if we were to mark it off, this is obviously the higher high, right? This is obviously the highest point. So we just got to find the higher low, right? This is how I have it drawn right now. This is the highest point. So where is the higher low? So I don't know if I would mark this off. If we do the snake, I don't know if I would mark this off as the higher low. I don't know if I would mark this off as the higher low. I don't see a sharp turn. And I don't know if I would mark this off as the higher low. I don't really see a sharp turn. Now you guys are seeing the difference between this and then this. This looks like an elbow. This one just doesn't look, it just looks like a pause. It doesn't look like an elbow. Does that make sense? Type 1 if yes, type 2 if no. So for me, I would still count this as the higher low right here. If that's the higher low and that's the higher high, let's see if we body close above that line. Did we body close above that line right there? Nope. That was like a perfect equal move. So this time frame as of right now, it is still bullish because we did not manage to break it. So if that's the higher high, then the higher low would be this point right over here. So this is the higher high. Then the higher low would be this point right here. We didn't break neither. So we are currently bullish on the 4-hour. Things could get tricky. That's why you got to like look at them in detail. So bearish, not bullish. So right now we got 3 time frames bullish. All right, perfect. You guys have any questions? Type 1 if yes, type 2 if no. I answered those buys last night. Fire. Perfect. If we create higher high and the move keeps creating a new higher high, do we keep moving the line until it reverses? Yeah. So I think basically what you're asking me is this, right? So let's say this point right here is just creating a high as of right now. Like we just keep moving this. You keep moving this line right here until it just decides to stop and starts having a pullback. So as of right now, this is the new higher high, so on and so forth. So yes, we just keep moving the line until it decides to have this right here. You see? So that's why we would mark it off right there because it stopped. Is it bullish even when it looks like a head and shoulders pattern? Great question. Great question. And I'm going to show it this. So this is the question that I'm getting asked right now. Is it still bullish even if it looks like a head and shoulders pattern? I would say, how do you know there's a head and shoulders pattern? Because this right now is like this, left, head, but this is not done. Because if this just keeps going, then it was just a higher high. It does, I mean, it looks like a head and shoulders, but it would look like a head and shoulders once it does this. This looks like a potential head and shoulders. So of course it's bullish because it's still bullish. The structure is still bullish. You see, look, we got the alarm hit again. Like you're asking me, is it bullish even if it looks like a head and shoulders? Yes, it's bullish. This can look like a happy face, but the market structure is still bullish. As of right now, this is nothing. If you notice, for example, right here, let's say, I mean, there's examples of these like everywhere. Like this right here would have probably looked like a head and shoulders. We had left head, and if this here would have kept up, would have looked, but then we went bearish. Yeah, I mean, so it can look like anything, but the reality of it is it's still bullish even if it looks like it. Perfect, right? So now what do? We understand we are bullish. Now we got a confluence number 2. Where are we buying and where are we selling? We go to the weekly time frame. We're just going to go bring over all of this from over here. Look at that, hit it again. So now we're going to bring over this from the weekly time frame. All right, so what do we got from here? Confluence 2. So if this would be the higher high, and then this would be the higher low. We know this is the area of interest zone. We start from the top down. This right here, would it be an area of interest? We got 1, 2, not really. We keep coming down. We got 1, nothing. We keep coming a little down, and we kind of got 1, 2, then maybe 3. Can we turn it into a zone? We got bodies, bodies, and then bodies. If that makes sense, type 1. If it doesn't, type 2. Simple, right? So we'll mark this off as weekly area of interest 1. If we get another zone like this, put it at the bottom. Keep coming, we got 1, kind of 2, but not 3. If anything, we could zone it off to something like this, where we got 1, 2, and then 3. So this would be weekly area of interest 2, right? But as of right now, since we are way above that, we are literally what? 200 pips away. There's no need to have that second zone. It just messes with your mind. Like you have it there. Once you're there, there's no need, right? Then we got daily time frame. We got, well, my bad. We got to go back to the weekly time frame, right? So at the weekly, what do we have on the weekly time frame? So do we have area of interest? Type 1 if yes, type 2 if no. Perfect. So we got area of interest on lock. So we got area of interest. Are we touching the EMA? Type 1 if yes, type 2 if no. Correct. Not touching the EMA. Do we have a candlestick rejection? Type 1 if yes, type 2 if no. 1 if yes, 2 if no. On this weekly candlestick right here. So it can be a little tricky. So you gotta listen to what I'm saying. Do we have a candlestick rejection on the weekly time frame? And as of right now, we do not, because this candlestick is not a rejection. This blue one is not a candlestick rejection, because we still got whole 4 days left. This can close like this for all we know. And then as of right now, if we were to look at like this, that is not a candlestick rejection of anything. That is bearish move right there. If that makes sense, type 1. If it doesn't, type 2. Perfect. So we understand that this is not a candlestick rejection. Do we have a rejection from previous structure points? Type 1 if yes, type 2 if no. You guys should know which one the previous structure point is. I'm just going to show you guys like this. Is it look more clear now? It looks a lot more clear now, right? It's crazy. It's just, everything is just perspective. So this is the last structure point right here. This one, not this one. This is not the previous structure point. If that makes sense, type 1. If it doesn't, type 2. Perfect. So we have no rejection from previous structure points. Do we have a round psychological level? Type 1 if yes, type 2 if no. Easy money. So we have a round psychological level, right? So from all of these, we would add weekly EMA, weekly area of interest. 3, we have round psych level. That's all we got because we don't have EMA, candlestick, or structure. So from the weekly time frame, we only got 2. Now from the daily time frame, we got to look for our area of interest. So this would be the higher high. This would be the higher low. And then we just put our zone. When we put our zone, we already had the pullback and we just made it right to the higher low zone where we can have it as an area of interest because it happens to line up, right? Also with the weekly, we got more than 3 touches and it is above the higher low. That makes sense, type 1. If it doesn't, type 2. Simple, right? You guys already know the higher low could be an area of interest. So we got here on the daily time frame, all of this right here. We got 4. I don't know. Let's do it like this, right? So we're at a daily area of interest. Type 1 if yes, type 2 if no. All right, so we got daily. Just put area of interest, right? So we got daily area of interest on lock. So do we have touching the EMA? Type 1 if yes, type 2 if no. Are we touching it? We gotta be touching it. So we are not touching it because this would be touching it. This is touching, this is touching. That is clearly not touching. So we have no touching the EMA. Do we have a candlestick rejection? Type 1 if yes, type 2 if no. You guys, I purposely did the Zoom at 5 o'clock because I wanted to have this candlestick closed so you guys can get the answer right. So yes, this is a candlestick rejection because we have a morning star bullish engulfing candlestick. So we have no EMA candlestick. Do we have a rejection from previous structure point? Type 1 if yes, type 2 if no. You guys are turning into snipers. This is getting crazy. So as of right now, we have no rejection from previous structure point because that would be the previous structure point. And then do we have a round psychological level? We already put that on the weekly time frame. So we have daily area of interest, and then we got 5 candlestick rejection, right? So let's just add all of these right here so far. 10%, 5%. You guys are seeing how everything is just like the same thing. Like it gets boring. You're just there like done, done, done. That's how it's supposed to be, by the way. 10%, and then we got a 30%. So as of right now, for this trade, we would have a total of a 30, 40, 45, 55, 65%. And we are still missing the 4-hour and so on. Why is it considered to be? Because we got the body right above the higher low. I mean, we could just move the zone a little bit up if you want to count. Dude, this is very helpful and repetitive. Dude, this is very helpful and repetitive with the example. No, thank you, bro. No, trust me. Again, like, dude, I literally just do all this for you guys. All right, cool. So now after we do the daily time frame, we go down to the 4-hour. So from the 4-hour, we understand that that is the higher high. We understand that this is the higher low. It's what we were breaking down earlier to understand where they were. Like you guys are seeing how all of this is based off of this right here, higher high and higher low. Like if you don't put these two things on right, you're just messing the whole thing up, right? You guys are seeing that. You guys are seeing, and I literally told you guys, if you guys go back to the beginning of the 5-day, that is the first thing that I told you guys at the beginning of the 5-day. Like I can't express to you guys how important these two lines are. They will make or break you. How long are we going to be able to watch these videos after the bootcamp? These videos are literally yours forever. Like again, like I'm not that type of guy like, oh, you only have them for like 3 days. Like, no, bro, they're yours. You guys do whatever with them, you know. You could play them in put them in a song or something. I don't know. You can do whatever you want with them. So basically, this is the higher high, this is the higher low. So are we touching the EMA? Type 1 if yes, type 2 if no. Obviously, let's say you'd be looking for buys. We already know that. So right now we are not touching the EMA in the way we want. So this is not touching the EMA. Do we have a candlestick rejection? We haven't done the pullback, so we are not at this point yet. Like we don't have none of these things because we haven't pulled back. Because this trade right now, if it just decides to keep going up, we never took it. Remember, we got to wait for the pullback for it to come back into the zone for it to make sense. If that makes sense, type 1. If it doesn't, type 2. If we would have been looking at the trade here, bet, yeah, here we can look at all these confluences. But since we're not there, we're trying to make it happen, then yeah, so the trade as of right now is paused right here because we are waiting for the 4-hour higher low. That's it. Simple. You just see how simple it is. Like this is where some traders will just be like, fuck. I just gotta get in. I gotta do this and gotta do this. And then when they don't even know is that the 4-hour is just doing the thing. Like you gotta let it do its thing, 21. Just let it do its thing. Because what it's gonna do right now is that it's gonna have the wick pullback into that zone, and that's where you get wicked out, and then it flies to the upside. Like I'm telling you, like it's very, very, very simple. This shit removes the rush to overtrade. Yes, I'm telling you, this is the sauce right here. This is the secret. Because let's say you were to want to take the trade right now. All right, go ahead. Take the trade right now. You only have a 30, 40, 45, 55, 65. So you only have a D to take the trade. Like you don't want to risk your money on a D. So you don't take it. Like I'm telling you, this literally forces you to only take good trades. That is the whole point of this. The whole point of this is taking good trades, not finding a trade every day. I literally only took 8 trades last month. So because when you do this type of trading, it only forces you to take the best ones. Would you put your take profit on the weekly? Just if you're buying off the daily and the weekly, just find like a happy medium. Like you gotta kind of be a little like, I mean, this trade, it's destined to create a new higher high. So the higher high should be above this. You just gotta ask yourself, are you willing to wait or not? But be honest, lately I've just been setting daily areas of interest. Let me see, that's my card. Like the alarm in the car went off. All right, perfect. So as of right now for NZDJPY, we are just waiting for the pullback to go long. Where do you set and forget? When you take the trade. Well, I mean, not even, we're setting forgetting right now. Setting and forgetting right now, waiting for it to create the higher low. How are we waiting for higher low? Like we're waiting for like just this like little pullback, I guess you can call it. Because this would be the potential higher low to create the new higher high. All right, so that is what we are waiting for on NZDJPY. Euro AUD. So Euro AUD is more of like I guess, yeah, I mean, yeah, I have it right here. So it's a big bearish potential move. So if you guys notice this time frame, you know, it's obviously bullish. So this would be the higher high, higher low, whatever. So we are obviously bullish on this time frame. But the thing is that kind of the same thing how the lower time frames, like you guys know, like let's say whatever, this right here, this is the pullback to buy. We already know like the lower time frames are doing this. Once we get here, we then shift to go up, like it's the first time frame to shift. We all agree with that. Type 1 if yes, type 2 if no. Perfect. So you guys understand that. And then if you guys notice here, the same thing that happens on the lower time frames is happening right now, but on the higher time frames. So the daily time frame, look how it's shifting from bullish to bearish. Like, look how beautiful this looks. Look how beautiful it's going from higher highs and higher lows to now just creating a left head and then now a right shoulder, because the weekly is overdue the pullback. The weekly is overdue something like like this before keep going to the upside. So the daily time frame has literally shifted to show you that it's going to have that bigger pullback right now. Just for me, I need for it to pretty much break and retest under this zone right here. Like I literally just need for it to do what it already did in the past, which is right here. If you guys notice, hitting the support, push up, I just need this break and retest to then sell. I can literally get this same market move from right here, literally the same exact move from right here, and just put it over here, and it's the same exact move. We just gotta like make it line up the same. I'm just waiting for the same break under the zone and then retest the sell. So because this is a very, very, very strong zone. See how hard it holds price when we're above and how price respects when we are under. So I just need for it to basically do this, and then it's going to be the new swinging to the downside. If that makes sense, type 1. If it doesn't, type 2. It's very simple. It just takes a lot of patience. So that's kind of what I have for Euro AUD. And then GBP USD, it's basically the same thing. Like if you can tell, the daily time frame has just gone bearish. This is basically it creating higher high, higher low, higher high. We body closed under the line. So now this is a lower low. I mean, this is the lower low, this is the lower high. So pretty much I am just waiting for it to just do this for it to make sense. It's literally the same thing. So yeah, that's pretty much what I'm waiting for. So realistically for this week, it's basically these top 3, because these are the ones that are gonna take the trade faster. But I'm just waiting for these 2 candlesticks. I mean, these 2 bigger trades to play out. So I'm kind of keeping my eye on them for next week. So yeah. So what do you guys think? Simple, clean, effective, repetitive, simple. It's just the same thing. Just the same thing. Just a different pair. Like, you know, say same shit, different day, same shit, different pair. It's really all it is. So simple. Do you close your trade manually? Yes. Do you use it to trade crypto? So look, I'm going to answer that question, right? Are we bullish or are we bearish? Bro, I'm telling you, I do this shit everywhere. Are we bullish or bearish? Type 1 for bullish, type 2 for bearish. That's fire, Mohammed. Congrats, man. Correct. So we are currently bullish. So this market structure, this would be the higher high. And then this would be the higher low. If you guys noticed, now we have higher high and higher low. Weekly time frame is bullish. Daily time frame, are we bullish or bearish? Type 1 for bullish, type 2 for bearish. It's crazy, right? You guys are seeing it. It looks insane. So we're clearly bearish. That's the lower high. This is the lower low. And then the 4 hour, are we bullish or bearish? And this is Bitcoin. It's like, you know, right? So we are bearish. And then the 4 hour is bearish, right? So the majority time frames are to the downside. So I think Bitcoin is going to keep going bearish until we get to this zone right here. Why? Because what is this zone? If I were to do this, and if I were to do this, this is the first area of interest. We got resistance, resistance, resistance. Now you guys are seeing how the same thing that I told you guys, I'm literally using right now on Bitcoin. This would be the perfect area of interest to buy on the weekly time frame for Bitcoin. So I have my alarm here to buy Bitcoin. So I currently don't own any Bitcoin, but when it gets to there, and if my strategy aligns, you guys already know. Because you can obviously buy Bitcoin right now if you have like a long-term play. But for me, it just comes down to this, right? If I buy right here and I close at the previous high for my take profit, that's 141%, right? Let's say if I take the same buy, but once we get into this zone right here and we go up to the high, that's 173%. I don't mind, you know, waiting a little bit for an extra 20%. Like this is just extra money for me at the end of the day, right? I personally think if you were like Bitcoin, like even on like the bigger scale, like the monthly time frame, you notice it has to come back and retest this structure point, retest the structure, retest the EMA, like everything is there. And if anything, it could come down even a little bit lower to this point right here. And what do we have at this area of interest? Brown psychological, 20,000. Like it's all, bro, I'm telling you, it's all the same shit. Like nothing changes. You would just, I don't know, make things complicated. If you buy this zone, you go to 216%. So these are my two zones that I'm looking to buy Bitcoin, the zone 1, and then this would be zone 2. But I'm just sticking to like the weekly time from here. I'm obviously not day trading this thing. So why buy if you are bearish? Because once we get to here, then I will wait for it to go bullish. Because I'm overall bullish on Bitcoin. I'm just looking for reasons to buy. And the only way for me to buy is if we get to the area of interest and then these time frames turn bullish. If these time frames don't turn bullish, I don't take the trade. Which better, to put order limits or to take the trades manually? Well, I think I said that one of the first days. If you're using order limits, you're taking a trade just whenever the market gets there. You're not taking it based off of like a confluence. Like, you're not taking the trade when it met your certain parameters. You're just, if it goes to that level, just buy it. That's not the best way, because this trade, it can start pulling back to this level and it can just stay going bearish and never shift structure. And then you just took a loss for no reason because you just didn't want to wait and see if it shifted or not. So that's the power of taking the trades manually. What helped you be able to hold your trades to take profit on such a large time frame? I mean, to me, they're not considered large time frames. These are my normal time frames. So what helped me? I wouldn't say anything. I just realized this is normal, at least for me. What percentage of the structure? I don't understand the question. Sometimes the spreads are so bad for market buy and sell. I mean, I don't know. Like spreads are just, it's just the part of doing business. Like there's nothing we can do. Like if you're profitable, I could guarantee you this, right? If you're a profitable trader and let's say you average 8% a month, you probably won't care for a 1% spread fee. Like that's like, let's say overall, let's say spread, swap, and commission knocks off like 1% from your 8. It's not a big deal. Like you're a profitable trader, you can make that back. It's just part of the game. But the whole spread thing is probably for just like mainly scalpers, because they're just like in and out fast. And if the market conditions aren't good, it could mess with your profits like significantly. But for me, it really doesn't affect me. Exactly. The spreads are only big when the markets are closing and opening. That's it. If not, they're not big at all. Like at all. Like the majority of brokers, they've controlled that. They've gotten that to it. Like the competition is so crazy that they understood that they have to make it normal. What broker you use? I mean, I'm trying out a new one. The name is Thor. Would it be this one? Thor FX. So one Rocket uses for the competition. They've been around for a while. I don't know, just like low key, I guess. But I like the theme, but I don't want to make like a public announcement or anything, because whatever happens with brokers, it's like, oh, it's your fault. No, I don't want that responsibility. Like you go wherever you want. But that's what I'm gonna start using soon. And if like I'm hitting them up right now, and if I could get like a dope like affiliate plan and I can have some type of control, but I'll do it, because then worst case, my face is there and they won't do that. But until then, I'm just good. I don't want to be responsible for anything. Like if FTX went down and they were regulated, they were in the Miami Heat arena, anything is capable of anything. But I'll try my best to put my money in the safest spot that I can. The area. But yeah, perfect. So what do you guys think so far of the 5-day?